Stay ahead of the game with our weekly economic insights, where we break down the latest financial news clearly and easily. Hi, I am Soumya. In today's video, we'll discuss the latest domestic and international economic developments to equip you with the knowledge you need to make better financial decisions. Today we'll discuss several key news stories impacting your finances. From Stripe's eyes on Indian payment market through a partnership with SBI Payments to SEBI's unaffected price rules to curb stock volatility from rumors. We'll also talk about RBI's consideration of allowing mutual funds to sell debt to ARCs and India's IPO market new record. Additionally, we'll get into Reliance's latest entry in consumer durable market with the Wyzr Brand to potentially bring affordable, innovative products to Indian consumers. This week's financial news roundup offers valuable insight to help you make informed decisions. Let us start with Stripe's talk with SBI. Stripe, the US payment infrastructure firm, is reportedly seeking to enter Indian payment ecosystem through a joint venture with State Bank of India's subsidiary SBI Payments Limited. The deal would involve Stripe acquiring a significant stake of 30 to 40% in SBI Payments, a joint venture between SBI and Hitachi Payment Services. The deal is anticipated to be carried out through Stripe's Indian subsidiary, Stripe India Private Limited, which obtained an RBI license to operate as an online payment aggregator in January 2024. This move would allow Stripe to establish a foothold in India's rapidly growing digital payments market, leveraging SBI's vast customer base and network. For Indian consumers, this partnership could potentially bring enhanced payment solutions, faster transactions, and improved user experience. Now let's talk about SEBI's latest rules. The Securities and Exchange Board of India has issued fresh guidelines to manage stock price fluctuations caused by market rumors. The new rules introduce the concept of an unaffected price, which aims to mitigate artificial price movements. These guidelines will initially apply to the top 100 listed entities from June 1, 2024, and then to the next 150 entities from December 2024. Under the new norms, listed companies must verify and respond to the rumors leading to material price changes within 24 hours. The unaffected price excludes the effect of the price movement due to the rumors and its confirmation. If the price variation due to the rumor confirmation hit the price band limit on the next trading day, subsequent price changes will be included in the adjustment until the price no longer hits the band limit. This move by SEBI seeks to enhance market transparency and protect retail investors from potential losses due to unfounded rumors. Well, RBI is also in talk with SEBI to sell debts to ARC. The Reserve Bank of India is talking with SEBI about letting mutual funds sell debts to asset reconstruction companies. ARCs are specialized entities that buy non-performing assets from banks and financial institutions to resolve and recover the underlying assets. Currently, ARCs can't buy debt from mutual funds, but this change would expand their options for acquiring financial assets. Allowing debt aggregation would help resolve stressed assets more efficiently. For investors, this could improve the recovery of distressed debt holding and boost the stability of mutual fund industry. Let's talk about India's IPO market's new record. India's primary market is poised to set a new record in 2024 to 25 fiscal year, driven by several large share sales and increasing issue sizes. 2 months into the new financial year, over Rs 50,000 crore worth of initial public offerings have already been lined up, nearly 85% of the total IPO proceeds raised in the previous fiscal year. Investment bankers expect the IPO lineup to be twice as large as the previous year in terms of the number of issues and their sizes. This enthusiasm to raise capital remains undimmed despite election jitters, reflecting a strong confidence in India's economic prospects. A robust IPO market for retail investors provides more investment opportunities and potential for wealth creation. Moving on to the experts' concern over silver prices. Silver prices have reached a record high of Rs 92,475 per kg, raising concerns of a potential pullback among market experts. The global rally in silver prices have been fueled by its increasing demand in sectors such as electric vehicles, solar panels, and semiconductors, correlated with a rise in copper prices. While India relies on silver imports to meet domestic demands, high prices above Rs 70,000 per kg may instigate Indian investors to liquidate significant quantities of silver bars and coins purchased over the past decade. Experts warn that the high prices could discourage buyers, leading to a 5 to 10% correction or pullback in silver prices after the recent spike. This development highlights the volatility in precious metal markets and need for consumers and investors to make cautious investment decisions. Let us look at Indian stock market's new milestone. India's stock market has achieved a remarkable milestone by crossing $5 trillion mark in market capitalization. This feat has been driven largely by the performance of blue-chip companies, which have accounted for 63% of the gains from $4 trillion to $5 trillion. In contrast, during the market's journey from $3 trillion to $4 trillion, the contribution from the top 100 companies and those beyond the top 100 was almost equal in absolute terms. Over the past 6 months, the outperformance of small and medium-sized companies relative to large cap has narrowed as investors seek the valuation safety provided by larger companies. This trend shows the importance of diversification for retail investors and highlights the potential for both blue chip and emerging companies to drive market growth. Now let us discuss Reliance's new brand with Wyzr. Reliance Industries, led by Mukesh Ambani, is entering the consumer durables market with Wyzr Brand. Over the next several months, the company will introduce small appliances like irons and fans, white goods and consumer electronics such as refrigerators and television. Initially, these products will be manufactured under contract, but Reliance plans to manufacture them in-house once sufficient volumes are reached. The company has already soft launched a range of coolers under the Wyzr brand on Flipkart and plans to expand into other categories soon. For Indian consumers, Reliance's entry into this space could potentially bring more affordable and innovative product offerings, leveraging the company's vast resource and distribution network. Now, take a glance at India's Q1 growth forecast. According to the RBI's May bulletin, India is expected to grow by 7.5% in the first quarter of this financial year. This growth is driven by higher demand and increased spending in rural areas. Despite global challenges affecting the supply chain, the Indian economy has shown resilience. The Economic Activity Index suggests a rebound in April, and early estimates predict GDP growth close to 7.5% for Q1 2024-25. The strong performance of the rural sector with the higher demand and spending is a positive sign for the economy's overall health and inclusive growth. This robust growth forecast bodes well for the Indian economy and could translate into increased job opportunities and improved living standards for the general public. Now, let us take a look at RBI's bonus to government. The Reserve Bank of India has given government a big gift of Rs 2.1 lakh crore. This is double the amount the government expected from RBI this year. This extra money has made the stock markets very happy. Why is this a good news? The government has more money to spend on important things like building roads, railways and other projects. This will help create more jobs and improve the economy. The government can also use some of this money to reduce its debt. Now you must be wondering, how does this help the stock market? Well, the stock markets are very excited because this extra money meant the government did not need to borrow as much. When the government borrows less, interest rates stay low, which is good for banks and they can make more profits. Let us wrap up with this week's market performance. Indian stock markets went up to new highest level on Friday. Banks and other money companies saw big buying. The Sensex crossed 75,600 and the Nifty went above 23,000 for the first time ever. On May 23, 2024, Indian investors bought shares worth Rs 12,439.4 crores, showing their positive market outlook. Foreign investors also bought Indian shares worth Rs 19,821.55 crores, which means their confidence in Indian market. When big investors pour in so much money, it is a signal that the market is very optimistic. That's it for today. This week's Economic Insight taught us about the significant changes and plans across different sectors. Amidst all these changes, one thing remained the same: the financial world continues to evolve rapidly. So stay alert, stay informed, and most importantly, stay focused on managing your money wisely.